All right, good morning, everybody. Happy Monday. It is 6:36. I know, a little tardy. 6:36 in the morning on Wall Street, 3 hours before the opening of trading. Welcome to QuantBox Live. It's time to get your global macro on. We'll uncover the best fundamental investment opportunities across the global markets. What's the value proposition to QuantBox clients, Wayne? That's a really good question. Our AI-driven analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning for both retail institutions and seasonality, and a basket of short-term risk gauges that cover things like VIX and the yen and the dollar and the yields and gold and a bunch of other things to uncover the best fundamental opportunities. So anyways, my name is Wayne McDonald. I am the founder, and I'm actually a real economist, a real degree in economics. Yeah, cool. And I built QuantBox because doing all this research is a lot of work, and you have to go into many databases, and it's very complicated. I spent over the weekend time in the OECD database looking for information. And one day I said, man, I'd like to automate all this stuff and then organize it with pretty colors so my simple mind can understand it, so I can make intelligent investment decisions. And so QuantBox was born. So anyways, if you're watching this on YouTube, you're watching it many hours delayed, why don't you join us live? And also, why don't you actually use this tool? See, QuantBox is not a website. It's a database. You literally log into the Google Cloud, and all this data is in real time. So you can do things like organize your buying and selling opportunities based on economic research. You could look at things like retail sentiment. Oh my God, look at all the retail over here. But you can compare and contrast that with institutional positioning. You can look at your commitment to traders report and track the flow of capital. You can do your own research. Nice. You can look at individual comparative analysis. So you can compare euro versus dollar quantitatively and score it and rank it into a bias and so much more. But you know what? It's $8 for the trial. Anywho, quantbox.co, y'all. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let me log into the database. Also, my chair is uncomfortable. Whoa. Is that too much? That's too much. Whoa. Hang on. Oh, no. All right, let me get into the database while I fix my chair at the same time. Is it this one? I want it comfortable, but I don't want to be laying down. There we go. Anywho. Logan. Boop, 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 boop. It's thinking. Okay, let's zoom. All right, look at the scatter plot. Wow. All right, we'll dive into that. Yields are still cray. 10-year yield, I'll remind you, like a year and a half ago, it was less than 1%. Now it's like 4.5 on the way to 5. And the 2-year is over 2. So the yield curve is steepening, but for all the wrong reasons. So that could end up being a problem. We'll see where this stops. Okay. Probably when the Fed decides that it's done, but that's not till the end of the year. Oil is up again. Did you buy it at 90? It just tickled 90 about an hour ago. Could be interesting. So my WTI holding above the psych level. Gold is still not down. Indication of worries of future inflation above growth. S&P 500 down. For sure down. Cool. Love it. Well, why would I like that? Because I'm going to buy it. So bring it down. It's almost a 382 discount, not quite. Euro dollar on its way to 106. So the USD is quite strong. Euro is quite weak. Remember, Europe has decided not to raise interest rates anymore. So there's little incentive to want to own it. And right now, dollar strong because some of the market, I suppose, haven't priced in another rate hike. But we've known for months, quarters, we've known for a couple of quarters that there's likely to be one more rate hike. Well, some people are now on the clue train and are pricing it in. All right, so that's what's happening now. Cool. Bitcoin showing risk off, tickling 26. Okay, it hasn't collapsed, but nonetheless, that is bearish. So when we look at the short-term bias, neutral for today, but we can go out a little further. Okay, quite bearish. Okay, quite bearish here on the medium term, quite bearish on the monthly term. So there is no doubt, right? This is beyond a shadow of a doubt, a bearish market. And I think it'll continue to be bearish at least this week. And I'm a bull, but I understand that this is a great opportunity to lose money if I'm a bull. So I got to be careful, right? But remember, this is factual. Very often when you see experts on TV, they give opinions, and I don't care about opinions. So how does this gauge work? By the way, I love that I display this to you because a lot of retail traders, they have these tools on their charts and that give similar things like you should be risk on or risk off. And I'm like, okay, what is it measuring? I don't know. How does it make those conclusions? I don't know. But you trust your money with this? Yeah, I think, right? And so here, how does QuantBox determine monthly risk off? Well, it's looking at the S&P 500. It's been down over the month. It's down. That's a negative score. It looks at yen futures. Okay. Down ever so slightly, but that is a positive thing. You risk on has yen, I be true. Okay. That's how we get there. Gold is up, but that's a risk off scenario. Yields on the 10-year T-note are up. That's bad. The dollar index is up this month. It's strong. The dollar's strong. That's bad. And the VIX, volatility is up this month. That's bad. So this is factual. See, this is quantitative. That's why it's QuantBox and not emotional box. Right? Pandora's box. This is QuantBox, right? So when you look at those things all together, now I have to refresh it. When you look at it all together, that wasn't the right way to refresh it. I can't talk and analyze at the same time. It's bearish. It's bearish. It's bearish. That's it. It's quantitative. It's mathematical. These are bearish market conditions. So this week you should look to be a bear. This way. You should look to be a bear until something changes. And I'm a bull, so I got to be careful. Okay, let me zoom in a little bit. Oh, now it's not going to do it. Oh, it's not done loading. Well, I got to move anyways. Let's move over here. This is the Commitment of Traders report. Okay. And ooh la la. Look at this. Yeah. Yen used to be the weakest. Now it's not the weakest. Interesting, right? So, anyways, what's going on there? Is it bad rand or is the yen strengthening a little bit? Well, we'll have to take a look at that. But this is a good way for you to understand where the capital is flowing. Money is flowing into, right, into oil. Euro's been strong for quite some time. A lot of institutional interest in there. Okay, gold, pound. Okay, you can read it. But what we care, this is a great way to just organize your thoughts, though, right? What's weak, what's strong. Because if you're a currency trader, you're trying to compare strong assets with weak assets. So that this is helpful, but it's right. But it doesn't show you the flow. It just shows you, right? This is kind of like the balance sheet. It's not a cash flow statement. So you also want to look at the flow. Okay. Little bit of money going in to the 10-year T note, offset by just as much coming out. So there are less bears and more bulls. Okay, we haven't and when you see the number, right, it's not a big change. So it hasn't had an impact on the 10-year yield, but it is something. Right? It is something less, a little less bears and a little more bulls, and that eventually would hold the yields steady, or maybe even start bringing the yield down. If this was en masse, for example, if this was statistically a bigger number, like if this just keeps flowing, more and more bulls and less bears, then it'll show the bottom of because you have to understand this has to do with the price, which then creates the yield, right? So, anyways, so what you want to show, yields have been going up, so the bond market's been crashing. So, if suddenly there's less bears and more bulls, then that crashing market is stabilizing. And the run on the yield has been quite some time. But you can see when I say crashing, I mean, look, it's 71% short. But maybe it's stabilizing. Like, can it get worse? Oh, it can get worse. But nonetheless, we want to track these flows. Okay. And look at this on oil. People are shorting and people are longing at the same time. Isn't that interesting? Yeah. Well, we're getting close to $100 a barrel. So some people are like, sell it. Why do you want to sell it? Because it's near $100 a barrel. That's the logic. And then you ask the other people, why'd you buy it? Because we're on our way to 100, which is to me messy. Okay. Some money going into yen, long and short, but it's attracting money. It's kind of interesting. So it's these changes that you want to look at. What are the biggest shorts? Okay. Money coming out of the S&P 500, but notice it's not just less bears, there's less bulls. Twice as many less bulls. I love the negative, the double negative. Twice as much less bulls than less bears. But nonetheless, look, money's coming out of that market. People don't want to play anymore. What I'd like to see is continued exodus on the short side and long, because look, most people make money on the way up. I own the stock market, I own the Nasdaq, I own the Dow, I own the S&P 500, right? Like, okay. So right now I'm hedging like stink, right? So anyways, I'd love for this to turn the other way, eventually some money going back into the long side. But right now, the institutions, this is what we care about, right? Institutional investors are quite short. Okay. So just money coming out across the board, though. So what does this mean? Less bulls, less bears. There is money on the sideline. What's the money doing? Waiting to sell or waiting to buy? Well, I think most people are most investors can only long, right? So anyways, that money is waiting to be deployed. I'm in that position. I'm hedged and I have cash, and I will be investing. I'll be increasing my position by 20% probably in the next 2 or 3 weeks. 20% more capital deployed. Yeah, I mean that's legit, isn't it? From 1 trillion to 1.2 trillion pesos. All right. Yeah, take a look at our scatter plot. I clicked on something. There we go. All right, cool. Everything in the top right is right as rain. Japanese stock market up. Notice that nothing is up that much. So the market really hasn't woken up. The news is like at the back of the week. What do we have? We have GDP Wednesday. I guess we'll look at the calendar. And then PCE apparently Friday. There was something on Thursday. It's not hitting me right now. But, anyways, so Bitcoin trades over the weekend. So we wake up on Monday and find out it's by far the biggest mover. But it's because these assets haven't been trading as much. So, anyways, it's been moving, and Bitcoin way down. So that's risk off. But remember, anything down here is expected. By expected, what that means is QuantBox is giving all of these assets a negative score, aka bearish. So QuantBox, you can tell, right, by this number here, Bitcoin is expected to be bearish and it dropped like a ton of bricks. Sweet. Well, that's normal. Right? QuantBox expected the DAX to be down, and it is. The S&P 500, the Dow, all these things are down as expected. All these things are up as expected. So when you look at this, Swissy, 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 okay? QuantBox is saying it's not sure yet, like it's expecting that to be a little bit more bearish. But remember, we're thinking forward, which is not necessarily quantitatively. And we've discussed when you look at the central banking policy and the divergence in them, QuantBox does show you that you should be expecting sustained Swiss franc weakness. Not quantitatively when you're comparing economic data, but when you're comparing the central banking policy, because that's really there. When it comes to central banks, yes, they gather economic data and then make a decision, but the decision is human. So there are Swiss bankers that say, we understand the economic situation of the rest of the world, but in particular Switzerland, and they have chosen to create a weak Swiss franc. And that is indicated in QuantBox. So you can do that under the central bank tab. So that supersedes this because you only look at the economic data to try to discern what you think the human decision is going to be by the central banking committees that make up these policies. So QuantBox does half the work, well, more than half the work. It automates the quantitative analysis, but it doesn't think like a human, right? So we still have to interpret based on these numbers, what the Swiss bank is going to do. So, anyways, I've talked about it before. I don't need to do it again, but we over the next 18 months, Swiss franc should remain generally weak unless the Swiss National Bank changes their policy. So, anyways, it's weak, and I covered it several days ago. And now that's one thing that you could be looking at is the Swiss franc pairs, right? And so maybe you look at something like Aussie Swissy, not Swissy yen. No. Well, here's CAD Swissy. And unfortunately, uh, meaning why unfortunate? Okay, it's very, very, very bullish, as one would expect. But here's the thing. This is the R3. Okay. And for me, under my rules of engagement for technical analysis, you never, ever, ever, ever expect R3 except in September. I think March might be another one. But anyways, definitely September. Like you would never expect R3 except in September. And if you happen to find yourself at R3 or myself, me, I'll talk about my personal rules of engagement. Um, I stop. I stop. No matter how bullish I am, and no matter how good it's been working for me, that's the terminal moraine, the end of the road, the terminus. Okay. Are you Googling terminal moraine? That's the end of the glacier's path. The glacier does not move forward anymore. It only retreats. So, anyways, boom. That's so now it's done. Um, so a pullback and long and gone. See, if the central bank policy stays the same for the next 18 months, there should be continued weakness at some point. I just can't execute a trade at that elevated price under my own rules of engagement. Now, you might have different rules, and that's fine. Okay. Aussie Swissy was a dog with fleas, and now has a rally going. So, how would you handle this technically? Wouldn't it be cool to buy a dip in a week or two? Can you wait that long? Okay. So, you might want to try to, like, let's say it does this, right? How are you going to handle it? Well, I think what you want to do is let it go up, let it come down, and start moving using the moving average like that, huh? Thing is, QuantBox is helping you put it on the radar. Okay. But now technically it might just be a little late. So what you need to do is say, I'm going to be early and set up the next trade. Okay. You want to be looking and trading like that. So you say, I'm bullish, but not today. I will buy a dip. See, bulls only buy dips. Now you're like, that's not enough leeway. Okay. Bulls only buy double bottoms or dips, not lower lows and not higher highs. Definitely not. Right. So, right, a double bottom looks like this and a higher low looks like this. So, is this a double bottom? No. Is that a higher low? No. So it's going up. Yeah. 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 It's bullish. You're a bull. You only buy dips. So that's one of the reasons why QuantBox is so great. It gives you the heads up, and then you deploy your technical analysis. It confirms trends, it confirms the fundamentals. And also, the greatest benefit is knowing when to let your winners run. So if QuantBox, and remember, we did talk about this a week ago and even a month ago, the central bank of Switzerland wants a weak Swiss franc. Aussie's not even that great of a currency, but you might have some confidence to say with QuantBox, you can rely on the Swiss National Bank to maintain its stance or its policy of creating a weak Swiss franc, and therefore you can go for more than 22 pips profit. Maybe you can be in it a week, maybe you can be in it a year, or somewhere in between. Okay. That means your trades are worth more because you're better informed. Kiwi could be the same, so on and so forth. Okay. So we'll just zip over one more thing, pull up QuantBox. Okay. If I were to draw this, delete, I'll change colors. Okay. Down, 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 up, up, down. So according to QuantBox, okay, September, less bearish, AKA bullish. October, bullish. November, bullish. And then somewhere in December, take profit. That's for the Aussie Swiss franc. So we are in this sort of the Aussie Swiss franc bottoms out somewhere in August, then up a little bit in September. And then from September, October, there's definitely a change. You see the definite change? So we have this July, August, September, but you got to read it through. From somewhere in September to somewhere in October, it goes from bearish to bullish. Okay. Definitely bearish to definitely bullish. Aussie Swiss franc over 20 years has always done that on average. Now be careful, because you can have 1 foot in boiling water and 1 foot in ice water, and on average, everything's okay. Okay, but nonetheless, these are the averages. So somewhere in September, Aussie Swiss franc goes from definitely bearish to definitely bullish to maintaining bullishness all the way through November. And then somewhere in December, something happens, right? And you're like, so now we go back to this. Look at it bottom out somewhere in September on its way to October. No, I can't get that now. Now I can't fit it. Now I can't. Oh. Anyways, I was trying to show you that it fits. So anyways, nonetheless, it fits. Now, I'm going to end with this thought, and I'll tell you why I'm a stubborn bull. I don't want to go broke to prove I'm right, but I do want to show you why I'm stubborn in the sense that I'm waiting to deploy my strategy. I might, if I'm wrong and I use technical analysis correctly, if I'm wrong and the S&P 500 drops all till the end of the year, I will not get very many opportunities to buy. Because again, I'm a bull, so I either buy a reversal pattern or I buy a continuation pattern. So if the S&P keeps falling, I'll just have tons of opportunities to not trade. I'll actively stay in cash. Choosing cash is a position. So anyways, this is the S&P 500. And we are here. QuantBox has this bearish. Okay. August, QuantBox is bullish. Do you remember? I was long like what, 8 positions at the third week of August, and they all worked tickety boo. Great. And then September is down, totally not unexpected. I was hoping the third week of August, or the third week of September would be good news from the Fed. Well, it wasn't bad news from the Fed, but I think a lot of the market was positioned incorrectly. So now they have to price in one more rate hike before a pause. But nonetheless, notice what I just did with Aussie Swiss franc. We have this over the 20-year average, somewhere between September and October, the stock market bottoms out and turns bullish. And then from October to November turns very bullish. And then somewhere in December, look, it's not bearish, it's profit taking, it's just less bullish. So are we in now the last week of September? Yep. We're in the last week of September. And then October, November over the last 20 years is up and then way up. And you can see the S&P 500's already dropped. Sweet. So I can choose to now sell low, which is late. I hate being late. So I'd rather be early on the bullish side, but not by buying the drop, betting the S&P 500 goes up. Why? Because it always goes up. That's what Wayne told me. Whoa. I'm ready, willing, and able. Doesn't mean I'm buying drops. I buy higher lows. So I'm waiting for a reversal. And I'm anticipating a reversal. And if one shows up, I have cash ready. Do you know why? Why do I have cash ready? Because in this period, let me delete this. In this period, from bullish to bearish, I took profit on some of my positions. And now I'm waiting for this period of bearish to bullish. And now I want to probably start putting that money back into the market and letting it run. Okay. So that's what I'm doing. So now I'm going to, I don't anticipate a good week. I anticipate a bad week in the stock market. I think we still have to figure out what the Fed's going to do. We have PCE at the end of the week. And unfortunately, that means none of our concerns are going to be resolved. There's some GDP. Okay, great, but that's backward looking. So everyone's going to be pointed towards PCE because that's the Fed's measure of inflation, in particular core PCE. So, right? So a lot of waiting this week. But if it does go from bearish to bullish, if it does find a bottom, I guess I might as well just show you where that is, where I think it is, and then we'll call it a day. Then I will deploy my capital. So I go here and I go S&P 500. I guess it's this one. Okay. And lots of gobbledygoo lines. Yeah, I got it. I know. Hang on. Don't get all upset. Okay. What I'm looking at is this is my preferred price. Let me change the color. I am anticipating my first purchase back. Well, another additional purchase of the S&P 500 in at this price of 4200. Okay. I have it all marked. It's a 50% drop from the top. It's a monthly S2. It's a nice little psych level. Okay. And we have, therefore, probably up to here, down, and then October is going to be November. Okay. So first week of October, probably the third week of October, and then we roll into a back to the top, let's say, or maybe a higher high by the end of November. I need a lot of good things to happen, but that's my plan. And of course, if it drops down here, I'm not in it because I'm waiting, and I don't buy lower lows. So what I'm anticipating is if it comes down to this price, which is 43, and then double bottoms and rallies, I'll probably try to buy it. It might collapse down to 42. Okay, well, I'll either break even or take a small loss. And then I'll try again here if I get a reversal pattern. So now I'm at the whim, if you will, of reversal patterns. If I get reversal patterns at support, I'm obliged to take them as a bull. And if they lie to me, I get stabbed in the back, so be it. But I won't throw down random trades or guesses. And thanks to QuantBox, I know I should get at least 2.5 months of up. But I'm actually going to hold it for 20 years, so don't worry about me. So anyways, peace on earth. May the pips be with you. May your profits be above average. I'll see you when I see you.
Hey, Wayne.
All right, got to go.
Wayne.
Yeah, one